GameStop was halted 4 times in the first 45 minutes of trading this morning as it surged up to 110%. It's currently up 75%, and we're only a little over 1 hour into trading. Guys, this is absolutely dangerous. But before we get into GameStop a little bit further, we're going to have 2 other points in this video to talk about later on. We're going to talk about Squarespace being taken private at a price below its IPO price a few years back. And we're going to talk about consumer sentiment and what it came in at and what that means. But first off, Roaring Kitty. As you guys all know, Roaring Kitty is the guy who hyped up GameStop. He posted this 14 hours ago, basically saying he's back in the game. That's what I'm being told this means. Guys, my Twitter is EMPaulG. Follow me there if you want to see my interactions. I tweet a lot. Also, if you like updates every single week, 4 or 5 times a week on what's going on in the markets, subscribe to this channel. We love doing updates. We're literally going to have this video up live within 1 hour of recording. Guys, this could not be more dangerous. This is not investing. This isn't even trading. Even with trading, and our guy Mo does trading, there's a process to trading. A good trader has a process. This is pure hype. And for everybody out there, I always talk about this. Who are the people that hype up GameStop? These are the same people who hype up Bitcoin. Go look at the people who follow the investments that you do and tell yourself, whose team do I want to be on? If a company is hyped up, if an asset is hyped up for the masses loving it and the people who don't have any really financial reason to be into it, backing it, exhibit some caution. This is a company up 75%. Now it's 68%. So it was 110% at one point. I think it got to $36 or so, whatever it hit, $36, and now it's down to $29.35. Is this the kind of company you want to be involved with? Let's look at the financials here, because this is going to dictate. Remember, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. And today, GameStop is winning by a landslide victory. But in the long run, what's going to happen? 10 years ago, revenue was $9.3 billion, 9.36, 8, 8.5, 8.3, 6.4, 5, 6, 6, 6, 5.3. It's a declining business. But this past weekend, I just posted on Twitter, is it possible to make an investment in a declining business? Absolutely. Is it possible it's a good investment? Absolutely. In fact, if you look back here, before the hype started, Michael Burry was a buyer of GameStop at $4 or $5 a share, maybe even lower. And then it skyrocketed and he got out. All-time high of $120 a share it hit. I think he got out at 30 or 40 bucks. So he made 5, 6, 7 times his money, maybe even 10 times his money. And Michael Burry is a great investor, but this is not from that reason. Look at this hype. Everybody said it was going to the moon. And even with its current rise today, it's still down 75% from its high back in 2021. This is dangerous. Now remember, what we're trying to do on our channel is to teach a process. You can apply this process to any investment you want. It's about being in touch with the fundamentals, but also more importantly, being in touch with the emotions of investing. You don't want to have FOMO here. I don't want you looking at this company and going, damn, it's up 68% today. I want in. I want you looking at it saying, what's the market saying? Now it's up 87.5%. Just like that. Just like that, guys. This is something to be very, very apprehensive of. Okay? This is a company. Average 5-year net income was negative $275 million. Average 5-year free cash flow, negative $200. Last year's free cash flow was a $240 million loss. They did eke out a gain on net income, though. But I look at it saying, be very cautious. What you apply this process to, though, is going to matter for you. But I look at this Roaring Kitty, and I don't sit there. What's the process here? I'm in. I'm back in the game. That's the process here? I don't know. I just look at it going, man, I feel like if you fast forward 10 years and we look back in time, what's the story going to be about for this early 2000s? Is it going to be, man, Bitcoin really changed the world? Man, GameStop really changed things. Wall Street was turned upside down by Reddit. Or, God, look how dumb it was. We thought some little digital currency that could be replicated with tens of thousands of different versions ended up being a scam. It's crazy that we thought Reddit was going to change the way investing was done. They took down Wall Street. Which one is more likely? I've said it before, I don't think cryptocurrency works in its current form. GameStop as a business probably doesn't work in its current form. Doesn't mean they can't transition. Remember, Blue Chip Stamps was bought by Warren Buffett and Charlie Munger in the early 70s when they had 120 million in revenue. 10 years later, 12 years later, the company did 100,000 in revenue. That's a decline of over 99.9%. And yet they made over 15% per year on their money. Why? Because they bought a declining business at the right price with the right assets behind it. And that's what's most important for you. So look, guys, this thing is changing like crazy. Even on a trading portfolio, a way of doing that, I just think to be very cautious about this. Consumer sentiment came in really bad. That's why I'm wearing my Michigan hoodie, quarter zip instead of my normal everything money. I went to University of Michigan, graduated in 2003. They're the ones that released the Consumer Sentiment Index. So first off, before we get into numbers, what is that? Very simply, they survey a bunch of consumers and say, how do you feel about the economy? How do you feel about your personal finances? Guys, this is what I want you to remember. This is a very backward-looking index. So people are going to sit there and say, and today, how do I feel based on what's happened recently? Okay? Because if all of a sudden their income went up suddenly in the last month or two and their stock accounts went up and all these things went up, they're going to say, oh, I feel really good about the future. That's human behavior. That's what humans do. This is not one of those things where they're actually going to say, oh, look at this because this is awesome because prices are low. It's just like when people say, how do you feel about the stock market? Well, the market's down 50% in the last year. How are they going to feel about it? When, as a process-driven person like you would say, hey, prices are down 50%. I feel really good about values. So remember that when you're looking, whenever you have anything involving people's opinions on their feelings, most people are going to look at what's their recent returns been? What's their recent performance been? If somebody just lost their job, doesn't matter what's going on in the prospect for the economy. If somebody just lost their job, they're not feeling good about the future. So on Friday, the index came in at 67.4, down from 77.2, which is still well off the Dow Jones consensus of 76. It represented a 12.7% decline for the month, and the one-year inflation outlook jumped to 3.5%, up 0.3 percentage points from a month ago to the highest level since November 2023. Guys, inflation is still a reality. The Fed's goal is to get that core inflation down to 2%. Now remember, core inflation excludes food and energy because of how volatile it is. Is it realistic? I don't know. Where's inflation going to be? I don't know. Where's the market going to be? I don't know. Are we going to have a recession soon? I don't know. And anybody who says otherwise is 100% wrong. They might get it right one or two times in their lifetime, but it's going to be hard to be very right. What I'm trying to teach here is a process to find good businesses at good prices. And if from there, stocks go down because of other reasons, you should use that as an opportunity to buy. But that's very difficult to do. Why? Because we all get caught up in the emotion. We all see the euphoria. We all see the jumps. We all see the drops. It's very hard to detach yourself from that emotionally. On the main channel, we're going to be releasing a video this week where one of my investments is up 116%. And it absolutely bothers me. Now, that's not a humble brag, it's nothing like that. But this is why it's important to understand a process. I want your process to be, I love this company. The price is good. I'm buying it. All of a sudden, something happens. The price goes lower. I reevaluate. I look at it and say, do I want this again? With consumer sentiment, it's a little bit harder because 70% of GDP is the consumer. 70% is consumer spending. So if the consumer doesn't feel good, what does that mean? They might pull back on spending. They might pump the brakes a little bit. That could lead to a decline in GDP, which is recessionary. But I don't know if that's going to happen. We've had major drops. This is a consumer sentiment index going back to the 1950s. And guys, when it's lowest is when? This was the stagflation time of the early 80s. This was the great financial crisis. This was essentially COVID, right? Or somewhere around there. I look at this saying, all right, well, when things are low, it's the consumer feeling the brunt of a bad recession or something like that. And when things are high, it's probably on the tail end of some really good times. Dot-com boom, right before COVID. This was when the 80s was starting to roar again. This was the late 60s when Warren Buffett said, I couldn't find anything to buy, and he shut down his fund. I want you to remember that. When things feel the worst, it's probably close to the bottom. Not saying it's going to be the bottom, but we're closer to the bottom than we are to the top. When things feel the best, just be a little cautious. It doesn't mean you stop investing. Remember, we're here to teach dollar cost averaging and buying good companies at good prices. Dollar cost averaging, the key here is no matter where stocks will go like this, but the prices will go like this. As you dollar cost average, you're going to overpay and you're going to underpay. But over time, you're going to pay the average and you're going to match the market. It's about being robotic about it. That takes a good emotional fortitude to sit there and say the market is not going to go to zero. The world is not going to go to zero. But when you're alone at home watching your account go down and down and down, it can be hard to understand that. That's why you need to be around like-minded people who can help you handle the emotions. So if you want to make better decisions, you want to have less emotional reactions that cost you money, click the link below, join our community. We have a limited space every single day, so make sure you get in before the wait list. $7 for 7 days. Now, another big exciting news today that was announced was Squarespace is being bought out, taken private on a deal worth $8 billion. So let's pull up Squarespace right now. Squarespace right here. So it's up 13% today. I believe it's going to go private at $44 or $46. It hit a low around $26 in the last year, but I think the all-time low is $18.50 back in 2022. Guys, this is a company. Here are the benefits. Here are the downsides to Squarespace. It's showing net income of a loss for the last 5 years and for this year, but free cash flow of $62 million last year and $143 million a year for the last 5 years. Now, look at this price to sales ratio. Some companies like Microsoft sell for 10 plus times price to sales. This is 5.8. And look at their gross margin, 77%. That's a really high gross margin. That's higher than Microsoft. So this company has a lot of potential, and it's a great company for making websites, handling business websites. Growth rate, 5-year revenue growth rate, 20%. One thing I don't like, 3% for the 3-year revenue growth rate. Now, they're going private. Why is that? Some group out there says, hey, we think there's a lot of untapped value here. We're going to take it private. We're going to focus on growth. We're going to grow the hell out of this thing. And then we're going to probably take it public again or sell it off to somebody else. Usually this involves some sort of debt because they want to get leverage. A lot of private equity companies have done very well doing this. And remember, rates are up now, so their borrowing costs are higher. So this deal was done 2 years ago. Who knows what it had gone at? But right now, this company's up a lot on going private. So this could be an arbitrage opportunity. Can you make a few percentage points by having this thing go private by buying back all the shares? Now, how much arbitrage is here? Not much, because it is $44 per share is the deal. That's around $7 billion. All right, guys, so that's what's going on in the markets today to start the day off. Make sure you subscribe to the channel if you like videos like this. I will see you in the next video.